Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Partial truce. The U.S. says Russia and Ukraine have agreed to a ceasefire in the Black Sea, opening up safe navigation on shipping routes. But the Kremlin says conditions still need to be met. Copper futures surge on a Bloomberg report that President Trump could slap import duties on the metal within weeks. Trump also stressing in a TV interview that he wants to limit exceptions when he rolls out reciprocal tariffs next week. And whatever it takes, Turkey's finance minister Mehmet Şimşek promises to restore stability to the markets following outflows triggered by the arrest of Istanbul's mayor. Well, it's just gone 8 a.m. across the Emirates, everybody. I'm not in the Emirates today. I'm actually in Hong Kong, Juana Versace, of course, where it is 12 noon, and just picking up on some of the market price action overnight, because we did see somewhat of an upbeat close to the S&P yesterday, so ending marginally in the green, not doing a whole lot. Futures, as you can see behind me, trading sideways today. But, of course, a lot of focus on that upcoming April the 2nd date, which is going to be the reciprocal tariffs date, and what the Trump administration may do in terms of watering down or at least limiting the scope of the application of those tariffs. Also keeping a close eye on some of the soft data that's been coming through from the U.S., disappointing to the downside. Consumer confidence yesterday in the U.S. coming at a 12-year low. So the numbers really taking a bit of a turn for the worse in the U.S. recently. The handover from Asia Pacific, for the most part, pretty positive today, up 0.3%. We keep tracking the movement in fixed income as well, and we spoke about this a couple of days ago, but it's been difficult for 10-year notes to rally beyond 4.25, 4.2%. We're back up above 4.3 again today, so about 2 basis points higher. And then Brent in focus, you can see we are trading above $73 once again. A bit of a bounce came through yesterday on reports that those U.S. stockpile numbers are actually sitting at the lows not seen since November. So a bit of a pullback in terms of the inventory, the stockpiles that are sitting in the U.S. This, of course, combined with news that there may be somewhat of a truce in place between Ukraine and Russia, at least on the Black Sea. And despite that positive news, we are seeing a bit of an uptick in the price of oil today. But it's not just the commodities, oil and the commodities complex that we're watching out for, also keeping a close eye on what's been happening to copper. Once again, a record high for the copper complex, and this time on back of tariff uncertainty and the fact that the Trump administration has floated the idea of imposing 25% rates, tariff rates on copper. So into that announcement and speculation around it, we have seen quite the rally, and you can see that almost vertical jump in the last couple of weeks. So copper at a record high. But let's get back to that geopolitical story that I mentioned now, just going over the walls. The U.S. says Russia and Ukraine have agreed to a ceasefire in the Black Sea. The Kremlin confirmed the truce, but says it's conditional on lifting sanctions. For more, let's bring in Bloomberg's John Herskovitz. John, good to see you. So talk us through what we know about this, I guess, partial ceasefire and how likely it is to actually lead to a full-blown ceasefire.
Sure. It's with Black Sea shipping. Both Russia and Ukraine are exporters of grain. This is a key route for their shipping. When it comes to the ceasefire, President Zelensky said that his forces, Ukrainian forces, would implement it immediately. But we've gotten the conditionality from Russia, some things which weren't in the agreement announced by the White House. Russia has said that it wants a removal of sanctions on its banks and companies involved in the grain trade. And this is a pretty large sticking point. It could be like one of the biggest reversals or easing of sanctions that have been put on Russia since it began its full-scale invasion of Ukraine more than 3 years ago.
Yeah, and when we talk about the likelihood of this leading to a broader truce, what is the Russian president, what has Putin actually said would be the requirements necessary to get there?
Sure. Putin has put on a lot of, he's looking at maximalist demands. These include Ukraine abandon hopes of joining NATO, no European forces as part of a peacekeeping force on Ukraine. The Kremlin's also seeking new elections in Ukraine. I mean, just some things which would not be possible for Ukraine to agree to in this. But the White House is looking at an April 20 deal for some sort of ceasefire, quite optimistic. And even President Trump today said that this could be a little bit overly optimistic, indirectly saying that Putin may be dragging his feet in terms of the ceasefire.
Yeah, and even when it comes to this partial ceasefire that's been agreed to on the Black Sea, key to its implementation is monitoring to make sure that there are no violations. Who will be present to monitor that there aren't violations from either party?
It's still difficult to say who's going to be doing this. And in terms of control of the Black Sea, Ukraine has done a fairly good job of getting control of the western part of the Black Sea. But who will step forward and keep an eye on this is really difficult to be seen. It's really difficult to figure out. There's a lot in the agreement that has to be worked out. And when it comes to the actual forces monitoring it, we're not sure how that is actually going to play out.
Yeah, Bloomberg's John Herskovitz says still a lot of questions up in the air, but it seems like some progress has been made. Thank you so much for the reporting. Well, Mario Draghi says Germany's decision to increase defense spending is a game changer as the U.S. pulls away from European security commitments. Speaking to me earlier today at a panel at the HSBC Global Investment Summit here in Hong Kong, the former ECB president said he believes Europeans need to boost their competitiveness, including through integrated defense. Draghi also advised the EU not to retaliate against the U.S. in the trade war, as it is more reliant on trade than the U.S. or China. For more to discuss markets and beyond is Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. I'm sorry I'm not with you in the studio today, Rashmi, but good to have you on. Nevertheless, maybe let's just talk about this upcoming tariff deadline, April the 2nd, the big reciprocal tariff day, or what President Trump has been calling Liberation Day. Have you changed the way you're investing and you're allocating portfolio based on this upcoming deadline because of the uncertainty around what might happen?
So we have changed our portfolio, Jemana, this year, but this is not as much related to the April 2nd deadline as it is related to, the general sort of, the way the economies are going, the way we see the geopolitical uncertainty and Trump's policies in general, including the tariff policies. So, what we are seeing right now in the global order, and I'm talking about the equity markets here, US, if you look at last year, it was already at a dominant position, both in terms of economic strength as well as in terms of valuations and stock market performance. And from there, the headroom for further improvement was a little bit, less. While if you compare it to Europe or you compare it to China, there we saw a lot more room for improvement, and which is where we broadened our allocation to these markets. In addition, what we were seeing was a fiscal tightening in the US as compared to more fiscal spending both in Europe and China, which is why we've increased allocation to these markets.
If indeed that fiscal tightening does happen in the U.S., so it remains to be seen how successful Doge will be on that front, for example, and if the Trump do want to extend the tax cuts. But let me just ask you about the U.S. data that's been coming through. I led the show pointing to the fact that investor confidence, consumer confidence, is at an 11-year low now. How do you think the soft data is going to eventually end up impacting the hard data? Because we haven't seen it yet.
Yeah, you're right, Jumana. So the soft data is I think it's a good predictor of what is to come, because I think ultimately sentiment has a huge impact. And in some ways, it also kind of talks about what is going on in the ground. So the uncertainty, the huge uncertainty that is there regarding Trump's policies and the impact that it may have on businesses and on consumption. I think this is something that is what is getting reflected in the soft data as of now. And, on the ground, we see even small policy changes. For example, this levy on Chinese ships, this is having an impact on the farmers in the U.S., for example. And this is something which is hampering their, exports as well. So all of these things, I think they tend to show up in soft data earlier, and then eventually they do show up in the hard data as well.
Yeah, and if you look at it from a micro perspective, we're well into the second quarter now, but the takeaway from the first quarter is even though there has been some slowing down of earnings momentum, the big growth earnings numbers are still coming through from the tech community, the tech stocks, those big tech stocks in the U.S. Do you expect that to continue into the second half of the year, or is that part of the market also going to be impacted by everything that we were discussing, from tariffs to uncertainty and to some of the weakness in the data that's coming through?
Yeah, that's right, Juman. And I think that is really the big question all investors are grappling with, the sustainability of the earnings in the tech sector, because a large part of these earnings have been driven by the hype in AI and the huge amount of hyperscaler capex that we've seen in the last couple of years. And now there is a question about the sustainability of this capex. So the real question is that how long can we see these kind of capex levels continue? And if they do not continue, then definitely there is going to be a downturn in earnings, because a lot of companies' earnings have been driven by this capex. So which is where we feel that there is definitely some amount of uncertainty that is creeping into this earnings momentum as well. And we like to be in the picks and shovels trade of AI. So we like the enablers of AI, and we also like the deployers of AI. So people who basically make the infrastructure for AI, and then people who deploy AI and get cost savings out of it. The huge spenders on AI is something where we've pulled back our investments from.
Yeah, what about the huge spenders on defense, taking it back to Europe again? There's been big momentum in these defense stocks in Europe so far this year. Do you expect that to continue, or do you think that trade has also run its course as well?
We are positive on that trade, Jumana. So on the European defense spending, we think that there is really no other alternative. And whenever we see such huge amount of spending in a particular sector, there are always some externalities. So there is job creation. There is also other manufacturing facilities. When you want to ramp up something so quickly, you will be using other manufacturing facilities. For example, recently I was speaking to a car company management in Europe, and they were saying that some of the idle factories might be used to make military vehicles because they are ideally suited for that. So all of that leads to job creation, to use of idle capacity. So we are quite positive on that. And because Europe really does not have another option here.
Yeah, that's true. Well, sort of echoing some of the themes that I brought up with Mario Draghi, which was a very interesting conversation to have around the future of Europe. And one of them was the fiscal multiplier that's going to come from all of this defense spending. So let's see what happens there. Rashmi Garg, as senior portfolio manager at Dhabi Capital. Now for a look at some of the other stories we're following. Republican leaders in the U.S. are close to agreeing on a tax cut plan and are eyeing a debt ceiling deal. The plan is an extension of President Trump's 2017 tax cuts, while the GOP aims to lift the debt ceiling by $4 trillion. Congress is looking to approve an economic package by the end of May, but some senators have opposed the deal over its impact on health programs. And Qualcomm has launched a global antitrust campaign against chip designer ARM. Although ARM is Qualcomm's biggest supplier, the longtime partners are competitors in the computing semiconductor market. Sources say Qualcomm's complaints to regulators on 3 continents argue that ARM is guilty of anti-competitive behavior by restricting access to its technology. And up next, we are live to Istanbul as Turkish assets rebound as the nation's top economic officials pledge to stabilize financial markets. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Hong Kong today. Turkish President Recep Tayyip Erdogan is taking steps to contain protests and curb a rout in financial markets following the arrest of Istanbul's mayor. Finance Minister Mehmet Şimşek told investors on a call he would do, quote, whatever it takes to stabilize markets, which have actually rebounded significantly. Bloomberg's Deputy Bureau Chief in Turkey, Beryl Akman, joins us now. Well, whatever it takes. I was just speaking with Mario Draghi himself a few hours ago, who obviously coined that term, whatever it takes. It seems like he's inspiring a whole wave of policymakers around the world now. But talk us through those comments from the Finance Minister Mehmet Şimşek and what they have done to help turn sentiment around in the last 24 hours.
Yes, Turkish Finance Minister Mehmet Şimşek and Central Bank Governor Fatih Karahan held a meeting, a teleconference call, with what they said was over 4,000 investors attending, to obviously calm investors after last week's fallout and ensure that they remain committed to the economy program that they have enacted since 2023, more market-friendly policies. And they said that these will continue, and just like you mentioned, that they'll do whatever it takes that is needed to defend the lira and make sure that a repeat of last week doesn't happen. One interesting bit that came out of that call that Bloomberg reported was these officials mentioned that the outflows we saw last week, which puts lira under massive sell-off pressure, came from offshore. And this is significant because a risk that has been mentioned by banks, including HSBC in the last week, is that household dollarization could be more risky for the officials as they have more impact on inflation going forward. So the officials didn't really touch on Istanbul Mayor Ekrem İmamoğlu's arrest or detention last week, saying these are judicial matters, sticking to the government's narrative. But they've said moving forward that they'll take any step needed to ensure that markets remain calm.
Yeah, interesting point, what the local investors are doing. And clearly some of the external investors were spooked, but what happens from here and what happens to the Turkish lira is going to be a function of whether the local community starts selling their lira and re-dollarizing. So very interesting point there. Just turning to the politics, Beryl, what is the latest in terms of where the protests stand and what the opposition is doing to recoup after the events of the last few days?
I think a couple of things. Yesterday, the main opposition party said yesterday's rally, ones that have been going on since last week, would mark the final one in a square in Istanbul where the Istanbul municipality is located. But the main opposition party leader, Özgür Özel, said that they'll continue gatherings and that there'll be another massive rally on Saturday. But what we are seeing here is that students are at the forefront, and there is a question whether these students who have been on the streets since Wednesday, they were on the streets again yesterday, will actually turn into a bigger grassroots movement that's separate from the opposition. On the other hand, President Erdogan also gathered with a separate group of students, and he said that Turkey is a very well-functioning democracy and actually warned students attending the protest that they should not be used by the opposition. Today, the Istanbul municipality will elect a new mayor as İmamoğlu was suspended after his arrest on Sunday, so that's something to watch out. But for now, tensions seem to have eased a little bit moving forward, especially with, I think, stocks rebounding and the lira being stable. So compared to last week, things appear to be relatively more calmer on the political front as well.
Yeah, so interesting. Beryl Akman, Bloomberg's Turkey Deputy Bureau Chief, thank you so much for bringing us all the developments from there. Well, coming up, Israel's parliament has approved the state budget for this year, shoring up Prime Minister Benjamin Netanyahu's power base. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Hong Kong. Israel's parliament has approved the state budget for this year with 66 Knesset members voting in favor and 52 against. It is a boost for Prime Minister Benjamin Netanyahu's power base, despite opposition from protesters and critics who say the budget prioritizes religious and far-right causes over the economy. Stuart Livingstone-Wallace, Bloomberg's executive editor from Middle East, North Africa and Russia, joins me now. I've got to say, it's interesting to see Netanyahu come out with a domestic political win. He's been facing a lot of backlash over the last couple of weeks over ousting the Shin Bet chief, ousting of the Attorney General, lots of demonstrations about the situation in Gaza and the release of hostages, and yet he still managed to get his budget passed through.
Yeah, I mean, he is the great survivor, it must be said, right over a couple of decades. You've seen it time and again. So what an operator. Nonetheless, I mean, I think this budget vote reveals a couple of things. One, as you pointed out, it means he can carry on because, you know, if they'd failed in that vote, then it, you know, theoretically would have brought down the government. So, again, I think that solidifies his position going forward, at least for the next several months. But more importantly, I think it again reveals those fault lines that you're seeing right across Israeli society now, and you're seeing those protests out on the street reminiscent of what we saw before the Gaza war in terms of the protests over the judicial reforms. And again, this budget itself, I think, reveals those fault lines where the opposition is pointing out that too much money, in their view, is being allocated to the causes dear to the heart of the far right in terms of Netanyahu's government. So again, I think it just sort of highlights on every aspect all the domestic issues that are going on within Israel itself.
Yeah, and of course the external situation continues to intensify. The Houthis seem to be undeterred by whatever was written in that group chat the other day vis-a-vis the attacks on Houthis out of the U.S. administration, and they're once again launching or attempting to launch ballistic missiles towards Israel. What do we know about those developments, and what exactly are the Houthis trying to achieve here?
I mean, I think a couple of things. Number one, it's not being confirmed by the US military or by Israel yet, I believe. So we only have it from the Houthi side now. But I think in some respects, it's a statement of intent. You had that massive bombardment from the US several days ago. As you pointed out, the somewhat unnerving revelations about the signal chat between members of the US government. But the Houthis have come roaring out the door and sort of signaled their intent that their attacks are going to continue. I think it shows the scale of the problem that the international community is going to have in terms of trying to curb these attacks. They are very well entrenched in Yemen. They are very seasoned now, and they have the sort of military equipment that is able to reach as far as Israel, which is really, quite a long way when you look at a map. In order to get missiles and drones up that far, they have to be quite sophisticated. So I think it's sort of a reminder to the world of the challenge that it faces.
Yeah, absolutely. And one group chat isn't going to eradicate the threat of Houthis. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Thank you. Well, President Trump has announced an investigation into how a journalist was added to a text group of top U.S. officials discussing plans for military strikes in Yemen. He has expressed support for his national security advisor, Michael Waltz, and suggested procedures might not change in the aftermath, with a criminal investigation unlikely. Waltz says he takes full responsibility.
We're going to get to the bottom of it. I just talked to Elon on the way here. We've got the best technical minds looking at how this happened. But I can tell you for 100%, I don't know this guy. I know him by his horrible reputation, and he really is the bottom scum of journalists. And I know him in the sense that he hates the president, but I don't text him. He wasn't on my phone, and we're going to figure out how this happened.
Okay, so the Trump administration looking to brush that one aside. Let's take a look at how markets are doing. S&P futures leaning towards the red, down about 4 basis points today. A marginally positive close yesterday for Wall Street, though as we spoke about, some of the soft data has started to take a turn for the worse. Dow also leaning unchanged. And then European futures up about 0.1% as we keep a close eye on the developments between Ukraine and Russia, with that Black Sea truce in principle agreed to. So lots more to come, but we're going to be talking about what's been happening in Turkey, with Turkish authorities saying 1,400 people have been detained amid growing concerns of protests. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Partial truce. The U.S. says Russia and Ukraine have agreed to a ceasefire in the Black Sea, opening up safe navigation on shipping routes. But the Kremlin says conditions still need to be met. Copper futures surge on a Bloomberg report that President Trump could slap import duties on the metal within weeks. Trump also stressing in a TV interview that he wants to limit exceptions when he rolls out reciprocal tariffs next week. And whatever it takes, Turkey's finance minister Mehmet Şimşek promises to restore stability to the markets following outflows triggered by the arrest of Istanbul's mayor. Well, it has just gone 8:30 a.m. across the Emirates. It is 12:30 p.m. over here in Hong Kong. Good to have you with us. Checking in on markets. Not a whole lot of activity, I should say, in terms of futures today. Trading sideways, slightly in the red, but better end to the session yesterday for Wall Street as we inched higher towards the end of the day for the majors. The handover from Asia Pacific also quite positive this morning, up about 0.3%. But of course, everyone around the world is eyeing that April the 2nd 2nd reciprocal tariffs day is going to be a key one for market participants, and how broad the scope of tariffs and its implementation is going to be a key driver for sentiment as well. Also keeping a close eye on what's been happening with 10-year U.S. notes. We are moving higher in yield terms, a couple of basis points higher this morning, so trading just shy of 4.35%. And then Brent also in focus, actually trading a little bit higher, above $73 a barrel. This on the fact that U.S. stockpiles came in much lower than expectations yesterday, the lowest level since November. So a bit of a technical impact that we're seeing on the price of energy this morning. As for another terminal chart that I just wanted to draw your attention to, so despite some of the positive signals that emerged in the beginning of the year, and we've been talking about Chinese and Hong Kong tech outperformance versus U.S. tech outperformance, that has been a big theme the first couple of months of the year. Just in the last couple of days, we have seen quite the sell-off in these Hong Kong tech names, and we are technically now getting close to a correction, i.e. a pullback of almost 10% from the most recent peak. So keep an eye out on that in terms of where we go from here, and market direction could be quite significant as we also keep a track of what's been happening with those U.S. equities, with the S&P as well, close to a correction territory. Now, speaking of, Bloomberg has learned that U.S. tariffs on copper imports could come within weeks, which would be months earlier than the deadline for a decision. That sent copper trading in New York to record, with the metal since paring some of its earlier gains. Bloomberg News Desk editor Jill Deesas joins us now live from the Hong Kong studio. It's great to be sitting side by side for a change. Jill, what do we know about these potential copper import duties, and when could they come into effect?
Yeah, well, look, I think this is really just kind of indicating how much Trump is really adamant about moving forward with a lot of these tariff threats that he's been making. So originally, you'd have to go back to February when he sort of tasked the Commerce Department with spending about 270 days sort of investigating the need for copper tariffs. It looks like at this point, what we're hearing that's ultimately a little more than a formality. So essentially, what Trump is trying to do is really push them forward. He said, "Look, I want to implement tariffs, sort of internally on copper," and we know that he's threatened to implement duties of as high as 25% on all copper. So I mean, really something that obviously you're seeing those price moves in copper right now, something that really does threaten to roil global markets there. I think that's kind of everything that's coming in here. It just does indicate that something could be coming within just the next few weeks.
Yeah, and commodities in general getting a bit of a jump. Let me just ask you, I guess, the obvious question. Why copper? Why is he picking on copper specifically? Is it anything to do with the fact that it is an important component in the energy transition?
Yes, I mean, look, I think that at this point, Trump has made clear this case that he does want to protect, sort of what he sees as, the U.S.'s role in sort of driving, a lot of, these energy industries. I think the big thing, though, when you're looking at sort of how he's really sort of impacted commodities is that, when it comes to copper, he's been really aggressive, it seems, on kind of, picking this up a little bit more and trying to implement something, a lot quicker. When you're looking at other, types of, sort of commodities that he's really kind of implemented tariffs on during his first administration, for example, steel and aluminum, when that first came up, really took about 10 months to kind of drive something forward there. So I think it really does show you that under Trump 2.0, a lot of these duties are coming in more quickly and more aggressively.
Yeah, and do we have any better information about what he may do on April 2nd, the so-called big tariff day that's coming up? I see you're breathing heavily. It's a difficult one to decipher.
Look, I think at this point there's still this kind of back and forth over how much this will actually come down to some of these blanket reciprocal tariffs. I mean, Trump was just in an interview earlier today with Newsmax saying that he didn't want to have too many carve-outs, for different countries. We do know that behind the scenes, a lot of the U.S.'s trading partners are sort of racing ahead to try to find those exemptions. Where can they kind of get some of a reprieve on these reciprocal duties that are coming into effect. But ultimately, there's still a lot there that's left unanswered. We've got, Trump throwing around different ideas for what could hit certain nations. I mean, at this point, we are still all kind of in that waiting game for what exactly will these reciprocal tariffs look like? How will they be handed down? Again, Trump saying he doesn't really want to have too many exceptions. That's kind of what he's been saying all along here. Whether that actually does come to be the case, it may not be until early next week that we actually see.
I guess one positive sign is the Europeans deciding to postpone their counter tariffs on steel and aluminium by a couple of weeks. That takes us to mid-April. So it tells you that perhaps there is maybe room for a deal to be constructed, not just on steel and aluminium, but more broadly on other industries as well.
Yes, exactly. And I think that, we've been seeing a little bit more of that restraint from other nations as well. Obviously, we saw, despite the fact that Mexico has been one of the big targets of a lot of these tariffs, they've really just kind of been sitting back and saying, we'll wait to kind of see what we can ultimately do here. You're seeing that from, the UK has actually been, quite a bit deferential, on what exactly could be coming, along with, several nations in Asia Pacific, for example. So yeah, I mean, it does kind of seem that at least all of these trading partners are saying, like, we're willing to kind of negotiate on what exactly these tariffs look like. And I think when you're getting that kind of a response from the EU, which just about a week or so ago was, acting much more aggressively about implementing these kind of countermeasures, does tell you that, maybe there is some room to make a deal here.
Yeah. Okay. Well, let's see what happens April 2nd. Big day. Jill, good to chat to you. Jill Desis, our news desk editor over here in Hong Kong. Now, Turkish authorities say they've detained more than 1,400 protesters since the detention of President Erdogan's main rival. Still, police are refraining from a severe crackdown of the kind that characterized demonstrations in 2013 and led to widespread international condemnation. And joining us now is Mustafa Akyol, senior fellow with the Cato Institute Center for Global Liberty and Prosperity. Good morning to you, Mustafa. What do you think happens from here onwards politically within Turkey? The domestic picture has obviously changed a lot over the last couple of days. How does the opposition regroup from this? Can they regroup?
Turkey observers have been speaking about a democratic backsliding in Turkey for over a decade, with concentration of power at the hands of the president, decline in rule of law and freedom of speech. So in a sense, you can say this is not big news, but actually it is news because this is an unprecedented level, an unprecedented step. This is the first time that the main rival to President Erdogan, the main promising rival, political opposition figure, is being arrested and put behind bars. This is Ekrem İmamoğlu, the mayor of Istanbul, who just appeared in Turkish politics in 2019, mostly as a rising star. He was able to defeat the ruling party in Istanbul, the greatest city of Turkey. And since then, he's been a charismatic figure. And that itself shows that elections in Turkey are competitive. So this is not a typical dictatorship. But the playing field has been growingly tilted towards the ruling party and the president. And this is yet another step. He may be in jail for months. We will see that. The accusations are not really convincing anyone other than the ruling party's supporters. But we've seen in Turkey that the judiciary acting really on behalf of the government. But this has also given the opposition a new energy. We've seen these in demonstrations. But there are still 2 years ahead for the next election, and whether this will they will keep the momentum, we will see that.
Yeah, so I want to pick you up on that point because there's still another 3 years until the Turkish elections, and so many people are asking, why now? Why did this crackdown happen now? There's still many years away, and it leaves enough time, to your point, for the opposition to regroup and get their act together potentially. What do you think was behind the political decisions the last few days?
We can only guess. I mean, this was the time that actually he was going to announce his candidacy for the presidency, which happened actually. But one calculation is that it is now because in 3 years this momentum may calm down and people may, stop seeing him on the screens or on the streets. Years might pass. There is another political figure, the leader of the Kurdish party, Selahattin Demirtas, in jail many years. So maybe this is the right time to do it. So his memory may fade away to some extent. That might be one political calculation that people are speaking about. We don't know. I mean, the government didn't make a declaration. They say it's a legal process. But other people are trying to understand the political rationale behind it.
Yeah, I mean, the other hypothetical answer to that question that people have also put forward is one whereby President Erdogan feels emboldened because the international community need him and need Turkey. Turkey's role within NATO, obviously very important with all the discussions now with Russia. They've got the second largest army within NATO. Turkey has emerged as a huge power broker in the Middle East region. Do you think all of that also may have factored in to the decision to perhaps clamp down domestically, knowing that there wasn't going to be a lot of backlash from the international community?
That is probably a factor as well. Turkey feels, President Erdogan probably feels that he will have good relations with President Trump in the years ahead, as he had in the first president of President Trump. Turkey feels that Europe needs Turkey more than ever now with the new security needs of Europe. Also, there has been good news coming out of Turkey, too, besides this. I mean, there has been a rapprochement, almost a peace process, a reignited peace process between Turkey and the Kurdish PKK, the militant armed group. That in itself is actually still a good news, but that also gave further optimism. Turkish economy has been put in order by Minister Mehmet Şimşek, who's I think now is trying his best to still keep things in order. So there have been some real good news and also some feeling that Turkey is more important and powerful now than ever. Turkey's growing role in Syria being one of those. When you combine all those, there's to be a political rationale. Will it hold? We will see that. I mean, nothing is certain in that sense.
You mentioned the moves of the last 24 hours out of the finance minister Mehmet Şimşek and President Erdogan himself to reassure investors about the economic trajectory. How closely interlinked do you think Erdogan's political fate is with what happens to the Turkish economy and the financial turbulence that we've witnessed in the last few days? If things get a lot worse, could it have knock-on effects to Erdogan's term?
It will have an impact because, I mean, the very success of President Erdogan, partly, mostly even, comes from the economic boom Turkey had in early 2000s, where President Erdogan was the prime minister at the time. But his party was new and actually less ambitious ideologically, and there were more people in the party, really competent people. Some of those people are now in the opposition. They formed opposition parties saying that the party has went to a totally different direction. Mehmet Şimşek represents that early era of rationality, understanding the markets, making pragmatic decisions. And Erdogan brought him after trying a really eccentric economic model for 5 years, which didn't work well. So I think President Erdogan understands that economy is important. He's careful about that. And that is one thing that still ties Turkey some global rationality, I think, to some pragmatism to some extent. Turkey is not a country that has endless oil or natural resources which can finance, different economic models. So I think that will still be an important factor that can bring in some restraint, some stability. But there's also the other ideological element, and there's also the need to just be in power for the years ahead. That seems to be the goal of the party and President Erdogan, and that in itself might be forcing some of these more illiberal authoritarian steps.
Yeah. Well, it's really good to have you on the show today. Thank you so much for bringing your perspectives. Mustafa Akyol, Senior Fellow with Cato Institute Center for Global Liberty and Prosperity. Thank you. Well, the U.S. has reportedly given Syria a list of conditions in exchange for partial sanctions relief. Reuters says the list of demands includes destruction of any remaining chemical weapon stores and cooperation on counterterrorism. The U.S. had issued a temporary license in January, allowing for transactions with Syrian state institutions and for the sale of energy. The EU also partially suspended sanctions on some Syrian sectors. And coming up, a truce in Mozambique. We get the details on the deal between the ruling party and the opposition next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Hong Kong. Now, Mozambique's opposition leader, Venancio Mondlane, has agreed with President Daniel Chapo to end post-election violence that has battered the country's economy and left hundreds dead. Mondlane says the two have reached a deal in principle at a meeting in Maputo, the capital, on Sunday. The informal truce marks the most important step in restoring social and political stability in the gas-rich Southeast African nation. For more, Bloomberg's Ondiro Ganga joins us now. Ondiro, is this a bit of a surprise that we got an agreement between these two candidates who are on opposite sides of the political spectrum?
Absolutely, Jumana. It comes as a surprise because on the 18th of March, Venancio Mondlane, who's the opposition leader, was calling for a nationwide protest to celebrate what he called true heroes and hundreds of people that lost their lives during the protest. And he has been leading very spirited protests against the current administration after a hotly contested election and very controversial results. Also on the government side, we saw President Daniel Chapo host a meeting with opposition leaders, excluding Mondlane. And a lot of questions were asked, why would you talk to opposition leaders without Mondlane, yet he's the most powerful of them, and he's the one who was leading the protest. And even as they begin these conversations, Mondlane still maintains that he won the elections, and these talks are informal in nature. They've just agreed to end the violence against both sides. But what it's going to do, one, it's going to help calm political temperatures because protests have been deadly and a lot of force has been used, and also it can help calm down the tension and the anxiety that the business community has been experiencing. Ever since the protests began, we've seen businesses looted, some have been burnt, some have shut down, and we saw international mining companies declaring force majeure. We also saw fear rising that there could be further delays to the $20 billion Total Energy natural gas project. And so this comes at such a crucial time. Also, there has been a lot of impact from the current political tension that has been going on in the country. If you look at the economy in the fourth quarter, it contracted, or rather it slowed down to 4.9%, and the government says that it has lost $664 million so far. So this dialogue, even though it's just the first step and there's nothing formal on paper, is a crucial step.
Yeah. Well, you mentioned a loss, an economic loss of also just more than $500 million. That is a lot of money for a country like Mozambique. How long is the road to recovery from here, given the violence, the economic costs, and the heightened political risk that exists still?
It's a long road ahead, Jumana, because this is a country that was already struggling with its economy prior to the elections, and just the political unrest sort of exacerbated the economic vulnerabilities that they're experiencing. They missed their IMF disbursement last year, and in March, the IMF team left Mozambique without a staff-level agreement. The longer it takes to unlock these funds, the tighter fiscal position the government finds itself in, and there's very little they can do because they have to continue sticking to the parameters within their IMF program. When it comes to external debt, they have a little bit of leeway. There won't be a lot of pressure there because their debt matures in 2028. But they have $81 million annual coupons that they have to keep paying, yet they're struggling with dollar shortages. They also had to swap their local currency debt that was maturing this year in March, and they swapped it for longer maturities and lower coupons, and S&P assigned them selective default. So you have a country that is at a very fragile and vulnerable state, and they have to do everything that they can to try and restore peace and stability with the hope that business picks up and it injects some form of vibrancy into the economy.
Yeah, there's an economic imperative to get that truce agreed to. Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you so much for the reporting. Coming up, President Trump has nominated a conservative activist as the new U.S. ambassador to South Africa. Details on how this will impact U.S.-South Africa relations next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Hong Kong. President Trump has recommended a conservative activist and writer as the new U.S. ambassador to South Africa. The nomination of Leo Brent Bozell comes amid strained diplomatic relations. Joining us now is Bloomberg senior reporter for Africa, Anthony Squazen. Good to have you with us, Anthony. What do we know about this new nominee?
We don't know a great deal about him, and I don't think South Africans know much about him at all. But it comes at an interesting time that President Trump's administration has nominated quite a prominent conservative activist who runs something called the Media Research Center, which says on its website that its purpose is to counter leftist bias in mainstream media. Now, it comes just weeks after the US expelled South Africa's ambassador for comments he made in a webinar where he effectively said that the Trump administration was a supremacist movement, in his words. And after President Trump had also cut off aid to the country and accused it falsely of seizing land from white farmers from the Afrikaner ethnic community and actually gone as far as to offer them refugee status in the US. So South Africa is scrambling to repair the relationship as the US is an important trade partner.
Yeah, so what are they trying to do? You listed some of the tensions that are ongoing right now between the U.S. and South Africa. What is South Africa trying to do to prevent things getting worse?
Well, the country appears to be working at cross purposes to a certain extent. The presidency and the government has said that it's trying to downplay tensions and has mentioned that it may send envoys to the U.S. to explain South Africa's policies and laws, to try and get the relationship back on track. But at the same time, the actions of the US have appeared to have angered some local politicians. There's been a lot of commentary in local media and parliaments. And the presidency has had to intervene to try and stop the Johannesburg municipality from naming the streets where the US consulate is based after a Palestinian hijacker who hijacked an American plane a few decades ago, which obviously would be a very inflammatory step. So it's a very difficult path that the presidency is currently trying to tread. And at the moment, it's occupied with trying to select the right ambassador to replace the one who was expelled, which was Ibrahim Rasool.
Yeah.
And there's a lot of debates about that and who that could be.
Yeah. Anthony, good to have you with us on the show. Anthony Sugwazin, Bloomberg's senior reporter for Africa. Thank you. Well, that's it for the first hour of Horizons Middle East and Africa. Coming up in the second hour, Rajeev De Mello from AMA Asset Management joins the show to discuss his market outlook. And we speak to Tanto Capital Partners' Ozan Ozkural on the continuing geopolitical pressures facing investors. I'm Joanna Bersetchi in Hong Kong. Stay with us as Jennifer Zabazaja joins me from Johannesburg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Partial truce. The U.S. says Russia and Ukraine have agreed to a ceasefire in the Black Sea, opening up safe navigation on shipping routes. But the Kremlin says conditions still need to be met. Copper futures surge on a Bloomberg report that President Trump could slap import duties on the metal within weeks. Trump also stressing in a TV interview that he wants to limit exceptions when he rolls out reciprocal tariffs next week. And whatever it takes, Turkey's Finance Minister Mehmet Şimşek promises to restore stability to the markets following outflows triggered by the arrest of Istanbul's mayor. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. It's actually good afternoon in Hong Kong. It's 1 p.m. today, Jen, here in Hong Kong. And I'm here for the rest of the week. It's good to be in a different studio.
Yeah, it's nice to have you, and good afternoon to you. It is still morning for me, though. I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, as we inch closer to that April 2nd deadline, clearly tariffs and tariff rhetoric getting back on the train for investors globally, but still a bit of confusion about what that's actually going to look like, just given these latest comments from President Trump.
Yeah. And I think that's key here. It's not about the looming deadline, but also the uncertainty about what could be announced. And that seems to be a theme that's popping up with many people that we talk to. And also it's showing up in the data yesterday, Jen. I don't know if this caught your eye, but consumer confidence in the U.S. fell to its lowest level in 11 years. So some of the soft data has really started to take a turn for the worse. That being said, the close yesterday for Wall Street was marginally positive, eking out some gains. It's still sitting close to that 200-day moving average. This morning, S&P futures trading sideways, not a whole lot going on there. This morning, the handover from Asia Pacific, though, quite positive. We saw quite a solid end to the day from the Nikkei. So that's been one of the outperformers in terms of those Asia Pacific indices that we monitor. 10-year yields moving a little bit higher as well, 2 basis points, 4.33 is where we are at. Some, again, resistance coming through around that 4.25 level. It's been quite difficult to break through that level to the downside. And then Brent, energy complex, back above $73, 0.2% firmer today. This on the latest data that came out yesterday showing that U.S. stockpiles had actually dropped to the lowest level since last November. So that gave the energy complex a boost. We were up about 2% yesterday in trading. But of course, as ever, keep an eye on geopolitical developments and the ongoing situation with that Ukraine-Russia ceasefire and the fact that they have, in theory, agreed to a truce on the Black Sea. So whether that's going to extend or lend itself to a broader ceasefire is a big question, but one step in the right direction. Now, another commodity index that we've been tracking very closely in the last couple of days is copper. Copper has hit a record high. This is the chart for U.S. copper as well. And all of this around, Jen was talking about this earlier, the tariff uncertainty, the Trump administration weighing the option of applying a 25% tariff on copper imports. And so people have been trying to get ahead of that deadline by bringing forward some of that demand. And this is having an actual impact on the price of copper. You can see an all-time record high there. Now, back to that geopolitical story I mentioned. The U.S. says Russia and Ukraine have agreed to a ceasefire in the Black Sea. The Kremlin confirmed the truce, but says it is conditional on lifting sanctions. For more, let's bring in Bloomberg's John Herskovits. John, so just walk us through what we know about this truce in the Black Sea and what it will mean for that bigger ceasefire and the potential for that bigger ceasefire deal to come into effect.
Sure. We have two different reactions to this. First, the Ukrainian side. President Zelensky said that his forces would immediately honor this ceasefire in the Black Sea, which will help shipping of grain. Both countries, Russia and Ukraine, are big grain exporters. But on the Russian side, there was the conditionality, which you mentioned previously. These conditions included lifting of sanctions on Russian banks and companies that are involved in the agriculture and fertilizer trade. And these would be could be some of the biggest rollbacks of sanctions that were put on Russia at the start of its full-scale invasion of Ukraine more than 3 years ago. You know, Russia is looking for help with its economy. It's really been hit hard by inflation, and these are some concessions that Putin may be trying to get this deal to go forward.
Well, you mentioned some of the conditions that President Putin has put forward in order for this to transition towards a broader truce. But what do we know about how both sides are thinking about this specific maritime Black Sea truce and the potential for there to be violations on either side? Who is going to be monitoring?
Yeah, it's very difficult to say who's going to be monitoring it. The Ukrainians don't put a lot of trust in Russia to keep up its word. Russia has shown that it doesn't really want outside forces involved in this, especially NATO members in any sort of monitoring. And these are technical details which just haven't been worked out yet. And getting to the ceasefire in the Black Sea is one thing. Then the nuts and bolts of how it's actually going to work, it's another thing which is really difficult to find out what the mechanism is going to be, who will be enforcing it, who's going to be doing the monitoring.
Yeah. Bloomberg's John Herskovits, thank you so much for bringing the latest on that all-important geopolitical story in Europe.
And let's turn back to the markets. Asian stocks posted modest gains on Wednesday as investors searched for a clear direction amid weaker U.S. consumer confidence and a late rally in U.S. equities. Joining us is Rajeev De Mello, Global Macro Portfolio Manager at GAMA Asset Management. Rajeev, great to get you on the show today. So we were mentioning there's a lot of uncertainty about tariffs and the looming tariffs April 2nd and what that's actually going to look like, overhanging markets right now. Compound that with a bit of consumer confidence weakening. How are you interpreting all of these different factors as an investor right now?
Well, thank you, Jennifer, for having me on the show. Indeed, a very interesting time for all of us investors. This impending tariff announcement on April the 2nd is really causing a lot of anxiety among investors and also in the real economy as well, as businesses don't know what exactly will hit them once these tariffs are implemented. And you mentioned the consumer confidence, that's declined. We've seen various other signs of confidence decline as well. It hasn't yet been reflected in the hard data because actually a lot of companies have front-loaded imports into the US, and that gave us a few good numbers in January and February, which are reported now. But it's really the confidence side which is taking a hit. And if these tariffs are material, it'll worsen things in the near term.
How are you thinking then about reallocating your assets, considering a lot of this uncertainty right now?
Well, markets usually anticipate moves, and uncertainty is very negative for the general market sentiment, as we've seen over the whole month of March, really, as investors have adjusted downwards. Expectations on growth, slightly upwards on inflation, all that's pretty negative. So I would think a lot of the worst is behind us already in terms of market action. Of course, we could have surprises, but we should be getting near the end of this correction as we get closer to April 2nd.
Talk about those potential surprises, Rajeev, because you were mentioning the soft data that we are getting. Could the surprises be if it starts to show up in the hard data potentially?
Yes, I think the surprises could also be the reactions of the other countries who are targeted by tariffs. First of all, the tariffs could be higher than expected. They could be retaliation, which could be escalatory. And also, U.S. policymakers could decide to talk about future tariffs as well and maintain the level of uncertainty. Those would be negative surprises. A positive surprise is that the tariffs are actually either delayed or they're actually quite small, and everybody can get back to business, and investors can breathe a sigh of relief, and that would lead to higher markets.
When we think about Chinese assets, Rajeev, we actually saw Morgan Stanley and Goldman Sachs actually recommending to be overweight Chinese assets. Are you in the same camp, or are you still sort of sitting on the sidelines waiting for a bit of this clarity to make itself known?
Well, China has really been the target of a lot of the tariffs, and the implemented tariffs so far, 20%, have been directed to China. A lot of the threats are also directed to China, which puts China in a difficult position. Having said that, China also has many ways of responding and softening the blow. We just saw some monetary easing announced yesterday, which is good for Chinese markets and confidence. And Chinese markets have really rebounded and are outperforming all other global markets since the beginning of the year. So the mood has definitely changed. So I am taking a more constructive view on China, but I'm still cautious that you have a few days up and a few days down. Don't chase the market, but look for good levels to get back into China.
What does that mean about for asset allocations then, Rajeev?
Well, generally, that means that you want to be diversified across countries. The U.S. remains expensive even after its correction. Europe's done quite a tremendous rally on news of the fiscal spending on defense and infrastructure. We've had a fantastic rally in Europe so far this year. But I think for investors, in terms of asset allocation, they should continue to diversify across countries and across currencies, because currencies could also play a very important role in the whole administration's way of getting to its goal of repatriating manufacturing into the U.S.
And so then, Rajeev, if we think about safe havens, are you still a part of the camp that potentially is looking to gold, even potentially the dollar, although we are seeing it dip a bit after a few up days? I mean, where are you finding some relief from a lot of the concern right now?
Well, gold's done very well in the last 12 months or so. Central banks have been big buyers. Now, the problem with gold is that it's really gone up a lot. So investors should be a bit more cautious, even though it is the safe haven asset by choice. U.S. Treasuries have rallied. They remain a safe haven asset. The Swiss franc is one as well, Swiss bonds as well, low yielders, but safe haven assets. Japanese yen is another one, which I like as a safe haven asset, which is relatively cheap as well.
All right, we have to leave it there with you, but appreciate your insights. That's Rajeev De Mello, Global Macro Portfolio Manager at GAMA Asset Management, joining us there from Geneva. Thanks so much, Rajeev. Great to get you on. Now, for a look at some of the other stories we're following this morning, Republican leaders in the U.S. are close to agreeing on a tax cuts plan and are eyeing a debt ceiling deal. The plan is an extension of President Trump's 2017 tax cuts, while the GOP aims to lift the debt ceiling by $4 trillion. Congress is looking to approve an economic package by the end of May, but some senators have opposed the deal over its impact on health programs. Qualcomm has launched a global antitrust campaign against chip designer ARM. Although ARM is Qualcomm's biggest supplier, the longtime partners are competitors in the computing semiconductor market. Sources say Qualcomm's complaints to regulators on 3 continents argue that ARM is guilty of anti-competitive behavior by restricting access to its technology. And coming up, we are going live to Istanbul as Turkish assets rebound as the nation's top economic officials pledge to destabilize financial markets. The details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Hong Kong today. Turkish President Recep Tayyip Erdogan is taking steps to contain protests and curb a rout in financial markets following the arrest of Istanbul's mayor. Finance Minister Mehmet Şimşek told investors on a call he would do, quote, whatever it takes to stabilize markets, which have rebounded significantly. Bloomberg's Deputy Bureau Chief in Turkey, Beryl Akman, joins us now. Well, whatever it takes was quite a significant moment in Europe in terms of turning investor sentiment around. To what extent has Şimşek been successful in allaying investors' concerns about what happens next with the Turkish economy on back of all the political developments over the last week?
I think we're definitely seeing a recovery as of yesterday, right after Finance Minister Mehmet Şimşek and Central Bank Governor Fatih Karahan held an international teleconference call with investors, with some 4,000 people attending the call. They reassured markets that they'll do whatever it takes, just like you mentioned, and the lira would be at the forefront of their steps and measures. Now, we've seen an array of measures, especially from the central bank last week, that included a surprise rate hike to one of its key rates. And that has really tried to calm the markets and ensure that locals particularly stay in the lira. Stocks particularly were top performers yesterday, and the currency seems stable after last week's massive sell-off. And we've seen good performance in Turkey's sovereign dollar bonds as well. So it looks like there's definitely a recovery, and the remarks from the officials are helping soothe concern and bolstering the Turkish assets.
Yeah, some stabilization coming through, both verbal intervention and, of course, the central bank has taken action. So that's helping. Just give us the latest, though, on what is actually happening on the ground in terms of protests and what the opposition are saying in terms of next steps and how they're thinking of regrouping.
I think a number of things to look at there. Student protests particularly have continued yesterday as well. Some of that has been led by the opposition, who's called people to the streets since Istanbul Mayor Ekrem İmamoğlu's detention and later arrest. But the main opposition party chairman, Özgür Özel, said yesterday that the protest by the square in Istanbul's municipality, where people have been gathering for the last few days, would be the final one there. And they would pause and do some other gatherings, but on Saturday they would once again hold a massive rally, this time on the Asian side in Istanbul. Today, the Istanbul municipality will also elect a new mayor following İmamoğlu's suspension. That is critical whether that person is actually going to be elected, democratically by the council, or whether that's going to be someone who's closer perhaps to the government and President Erdogan. And speaking of President Erdogan, he also met with a group of students yesterday evening, and he talked about the protests, actually warning students who are attending them, saying they should not be used by the opposition, and reiterated his remarks that this was street terror. But at the same time, the president, who has distanced himself from Imamoglu's case, said that Turkey is a very well-functioning democracy. And these things we have seen in the past week were fueled by the opposition, and he lashed out at the opposition for triggering volatility both on the ground in terms of protests as well in the financial markets.
But still, clearly keeping a close eye on what happens with financial markets from here, with those interventions from the finance minister and indeed the central bank over the last few days. Beryl Akman, thank you so much for bringing us the latest. Bloomberg's Turkey Deputy Bureau Chief. Now, President Trump has announced an investigation into how a journalist was added to a text group of top U.S. officials discussing plans for military strikes in Yemen. He's expressed support for his national security advisor, Michael Waltz, and suggested procedures might not change in the aftermath, with a criminal investigation unlikely. Waltz says he takes full responsibility.
We're going to get to the bottom of it. I just talked to Elon on the way here. We've got the best technical minds looking at how this happened. But I can tell you for 100%, I don't know this guy. I know him by his horrible reputation, and he really is the bottom scum of journalists. And I know him in the sense that he hates the president, but I don't text him. He wasn't on my phone, and we're going to figure out how this happened.
And coming up, Israel's parliament approved the state budget for this year, shoring up Prime Minister Benjamin Netanyahu's power base. The details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Israel's parliament has approved the state budget for this year, with 66 members voting in favor and 52 against. The move boosts Prime Minister Benjamin Netanyahu's power base after days of market turmoil related to the war in Gaza and his government trying to fire top officials. Paul Wallace, who leads our MENA economy and government coverage, is joining us now from Dubai. Paul, walk us through just how significant this approval is for Netanyahu, given some of the pictures that we saw in opposition to this, and especially the events over the past few days and weeks.
Hi, Jennifer. It definitely is a milestone for Prime Minister Benjamin Netanyahu, and something that will be a big relief for him. This budget was always looming, and to sort of simplify, if this budget had not been passed yesterday, the government would have collapsed under Israeli law. And a lot of people were thinking in the past few months and in late 2024 that if one thing was going to break the coalition, it would be a failure to pass the budget. So it's certainly a relief for Netanyahu, but I think it's a bit of a short-term one. And as you mentioned, and as we've seen in this footage right now, the 59 that those Knesset members are holding up refers to the 59 hostages that are still in Gaza. Those opposition members who rejected this budget essentially say that the budget prioritizes the causes championed by the far-right coalition, religious causes, and it doesn't do enough to boost the economy or help the military in this multi-front conflict. And they're saying it will do nothing, this budget will do nothing to help Israel as it fights continues to fight the war in Gaza against Hamas.
And we're also hearing, Paul, potentially about a conflict between the Houthis. They reportedly say that they attacked military targets in Tel Aviv. How much clarity do we know about what actually happened here?
So this is yet another attack by the Houthis on Israel. They're regularly firing missiles and sometimes drones at Israel. They these projectiles tend to be intercepted by Israel's air defense systems, and they cause little damage almost all the time. However, they do cause quite a bit of chaos on the ground, even if they don't cause damage, because they set off air sirens over large areas, and it's certainly not something the Israelis want. But this is all part of the Houthis' renewed spate of attacks on Israel and U.S. warships in recent weeks.
Paul Wallace, who leads our MENA economy and government coverage, joining us in Dubai. Paul, thanks as always for your reporting. Great to have you on. Let's take a quick check at where your markets are positioned. We mentioned April 2nd is fast approaching, but a bit of confusion about what exactly is going to transpire, especially as we hear from President Trump potentially saying not all countries will be exempt. Certain countries will be exempt, but not too much exemption is what he clarified. But right now, if we take a look at S&P futures, largely unchanged, as are NASDAQ 100 futures. Eurostock 50 futures tilting to the green. But again, as we spoke with our guest earlier, is trying to get some clarity about how these tariffs are potentially going to affect different countries and companies alike. Now, coming up, nations and tech firms are pushing the Trump administration to rethink its chip curb strategy. More on those details next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Partial truce. The U.S. says Russia and Ukraine have agreed to a ceasefire in the Black Sea, opening up safe navigation on shipping routes. But the Kremlin says conditions still need to be met. Copper futures surge on a Bloomberg report that President Trump could slap import duties on the metal within weeks. Trump also stressing in a TV interview that he wants to limit exemptions when he rolls out reciprocal tariffs next week. And whatever it takes, Turkey's finance minister, Mehmet Şimşek, promised to restore stability to the markets following outflows triggered by the arrest of Istanbul's mayor. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Hong Kong, where it's just gone 1:30 p.m. Welcome to Horizons Middle East and Africa. Well, Jen, for markets, obviously the focus for investors is going to be the tariffs and the upcoming tariff day. I've got to say, over here, earlier on in the day, I had the opportunity to sit down with none other than Mario Draghi. And there we spent a lot of time talking about the significance of that German defense spending package. And he did say that it was a game changer, but then also said that other reforms need to take place at an EU-wide level in order for that progress to be sustained. But it is important in the context of some of the market moves that we've had so far this year and the fact that we have seen such a big European equity outperformance.
Certainly, and sort of a coalescing to a certain extent of European nations to a certain extent. Fascinating conversation that you had there, Jumana. Let's just take a look at where the markets are positioned. As we mentioned, there are quite a bit of factors that investors are focusing in on today. There is, of course, those comments from President Trump, the continued apparent tariff roller coaster that it seems that we continue to be on as we get closer to April 2nd. But then, of course, some of that soft data that we did get on Tuesday about potentially consumer confidence really waning in the U.S., hitting a new low. But let's just take a look at where futures are positioned right now. We did see U.S. equities sort of whipsawing between gains and losses on Tuesday, though closing the day with a late day rally as we did see some of the big tech stocks driving U.S. stocks higher. That was, of course, though, before we did see this consumer confidence survey coming out. And we did also get a report recently about NVIDIA chips potentially bringing down NASDAQ futures ever so slightly, so tilted to the downside right now. The Bloomberg dollar is up marginally right now, but still we did see the dollar halting a 4-day advance as these concerns continue to loom about the potential impact of tariffs and, of course, on inflation. Copper right now, latest commodity to really feel the brunt of these Trump tariffs. We were mentioning this in the intro, but the president threatening to reportedly threatening to impose a levy of as much as 25% of all imports within weeks. That could, of course, really roil the global market for metals. That is, of course, used globally, of course. And we did see U.S. copper hitting a fresh all-time high right there, up just about 0.9%. And then finally, Brent crude back above $73 a barrel. They're trading about just over 0.2% up. We did get an industry report indicating that there was a drawdown in U.S. inventories, but still lower. Brent is lower on the day as we continue to parse through the developments in the Ukraine war. And just let's go back to the soft data that we did get on the U.S. market sentiment, and that is indicated in this terminal chart. If we can take a look at that, U.S. consumer confidence hitting the lowest level in 4 years, as we have seen higher prices, President Trump's escalating tariff war, potentially or seeming to stoke concerns among Americans that the prices are going to be going higher and really concerned about the future of the economy. And so this is just a look at what we are seeing and what some of this data that we did get on Tuesday is indicating to us right now. But let's pivot back to the Middle East. Senior foreign officials from nations such as the UAE and Israel and major tech companies are pushing the Trump administration to rethink the country's global semiconductor strategy. That's as the U.S. prepares a controversial framework for controlling AI development around the world. For more, we're joined by Bloomberg's Galit Altstein in Tel Aviv. Galit, for just a bit of context, why are new U.S. policies, raising alarms in the Middle East? What is it that is really concerning these companies?
Yeah, so as you say, this AI diffusion rule is causing alarm in the Middle East, mainly in Israel and in the UAE. The Israeli economy heavily relies on its large high-tech industry, in which AI is the top priority. And we have the Israeli Innovation Authority telling us that Israel ranks about 7th among AI world leaders, and that there are over 2,000 Israeli AI-based companies in various sectors of the local economy. The UAE has perhaps the largest concentration of data centers in the Middle East, and in aspiring to diversify its economy away from oil, the Emirates has been positioning itself as a tech powerhouse, and it has become an attractive destination also for AI startups. So the AI diffusion rule, which was enacted by former U.S. President Joe Biden just before he left office, it limits the number of AI processors, of AI chips that can be exported to most nations, including Israel and the UAE. And that basically places a cap on the computer power that's available for export from the U.S. So what Washington wants, in essence, is for AI development to remain concentrated in the U.S. and among its close allies. And it also wants data centers, their infrastructure, to align with U.S. security standards, with a main focus on stripping them of Chinese hardware. And that's what the U.S. wants to achieve.
What's the likelihood, Galit, we will actually see the U.S. administration changing its policies? If we take a look at this Bloomberg story, if you take a look at the map, really, of the global picture of what this tier looks like in terms of restrictions, it's quite vast. So are we likely to see the U.S. changing their stance?
So we don't know the answer to that as of yet. We do know that both countries, Israel and the UAE, are heavily stepping up their efforts to convince the Trump administration to shift them to a list of what's known as first-tier countries whose access to U.S.-designed AI chips is unlimited. And they're trying to beat a deadline for compliance with these new rules that should arrive in slightly less than 2 months. So for Israeli officials, the main concern is that Israel will become less attractive to U.S. chip suppliers because the regulatory burden involved in selling to local companies will just get too big. And that could also influence investors and entrepreneurs who think twice, perhaps, about starting new companies here in Israel or investing in them. So given the urgency of this matter, the Israeli Prime Minister Benjamin Netanyahu was briefed on this by his advisors ahead of his meeting with President Donald Trump, which was just last month in Washington. And Israeli officials are telling us that talks between senior Israeli and American officials are still on ongoing on this matter. Emirati officials have really tried to demonstrate that they're in alignment with the American security priorities. However, there's still no certainty in Washington on whether Emirati companies can actually keep Chinese companies from tapping data centers, given their close ties with Beijing. We should probably also mention that Israel is in the process of tightening restrictions on its own dual-use exports. So they're hoping that maybe this could satisfy the Americans once again, giving the primary concern of the U.S. is leakage of advanced technologies to rival countries, first and foremost to China's. So, our reporting reveals that U.S. administration officials are nowhere close to an agreement on this. So there's more to come on that.
It's a fascinating Bloomberg scoop from you and the team. Appreciate you digging into this for us. Bloomberg's Galit Altstein in Tel Aviv for us. Thanks so much, Galit.
Well, Bloomberg has learned that U.S. tariffs on copper imports could come within weeks, which would be months earlier than the deadline for a decision. That sends copper trading in New York to a record, with the metal since paring some of its earlier gains. Joining us now is Ozan Ozkural, Tanto Capital Partners, founding managing partner. Ozan, there is so much going on. I don't even know where I want to start with you with this interview. Maybe let's just start with that looming deadline, the tariff day, April the 2nd. How difficult is it to construct a narrative with any proper conviction, given we're sort of living day to day by what the Trump administration may do or may not do with these tariffs?
Well, good morning from London, Jumana. I must also say that Mario Draghi is quite a tough act to follow. So we have a lot to talk about. If you take a look at the looming deadline in April 2nd, I think this is just one phase of the new world that we need to get used to living under, i.e. tariffs or the threat of tariffs is just going to be the cause of volatility across the markets, whether it's copper, whether it's secondary sanctions on Venezuela, whether actually it is some sort of a deal happening with Russia, Ukraine, which will actually potentially end up bringing Russian crude back onto the market within commodities. I think the name of the game is volatility is your friend. And if you're trading volatility and if you're long volatility, you have opportunities. But risk is becoming more and more difficult to price.
Yeah, well, thank you for the reference to the conversation that I had with Mario Draghi earlier. Maybe let's just pick up on that, because I obviously did pose the question to him about how much of a game changer Germany's defense spending plan is. And he said it is actually a game changer, but it's not the panacea. It's not going to be the solution to all of Europe's problems. There's still plenty of other reforms that need to take place. They need to also keep their focus on the single market. Do you think, therefore, that the rally that we've seen in European equities this year so far will at some point run out of steam if it's not accompanied by further action at an EU level?
I think, absolutely. I think we will look at a much more stringent differentiation between different markets within the EU, because not all European countries are equal when it comes to this new landscape that we're operating under. For example, France potentially will positively decouple compared to, say, Germany because of their more intense focus on AI and technology. The fact that they're much more energy independent, whereas Germany has a much higher hurdle to try to overcome. Also, with this European rearmament fund starting at 150 billion euros, France and French aerospace and defense companies are a much bigger beneficiary of that than some other countries and some companies. I think the name of the game, Jumana, is that, and as Mario Draghi has laid out on his report last year, one part of the challenge is finding the capital, finding the budget to be able to invest in European innovation and now defense. But the larger challenge potentially is to be able to overcome the European bureaucracy and the lack of coherent decision-making that is applicable to all of the EU nations at a time where we need to have a much more single-minded approach towards policy. And I think on that part, Europe is going to find it very difficult to implement policies that is appropriate for this point in history.
Yeah, it's interesting. We touched on that as well, and that, with the progress or lack of progress of the Capital Markets Union, essentially it boils down to the fact that you have to have unanimity, and there are smaller countries that have been vetoing progress on that front. So it comes down to decision making. Let me ask you this: if we do get a ceasefire deal this year between Russia and Ukraine, first of all, is that your expectations? But if we do, what do you think it does to Europe's ambitions on defense spending? Will it sort of remove the impetus for them to go so big fiscally?
First of all, we may get a deal within this year. I think we are still far away from a deal, because if you take a look at the stipulation from Russian side in terms of what it takes to have a deal, you're talking about including Russian banks back into SWIFT. Again, it needs European approval. You're talking about bringing agricultural trade and potentially a flow of Russian crude back into the market, which are quite large items to try to overcome. So will we get a deal? No one knows, but I think it's plausible. Will this change the need for Europe to arm itself? Absolutely not, because it takes much more than just capital to create an army. It takes time, money, but also technology. And I think this is an area where we also should be focusing more as investors. We just heard about the impending AI diffusion rules in the US coming on May 15th. That is quite a big game changer in terms of which countries are able to utilize the high-powered chips. And given the importance of AI in warfare as well, I think it is very premature to say that Europe doesn't need to spend on defense. I think it's quite the contrary. I think European Union needs to spend, and also spend very wisely on defense, Jumana.
Yeah, Ozan, just to round up the discussion, the past few weeks we've seen several not positive developments in the Middle East, flaring up of tensions once again. Houthis obviously back on everyone's radar after the revelations yesterday. But do you think investors are being complacent about the geopolitical risk that's emanating from the Middle East? And could we see a flaring up in that part of the world in the second half of the year?
I don't think investors are being complacent, but I think investors are finding it difficult to differentiate in terms of what part of the Middle East we are targeting. I mean, you just witnessed Saudi Arabia host a very high-profile kind of forum to try to help defuse the Russia-Ukraine war. At the same time, you have GCC countries, again, particularly the UAE, that is really taking significant steps, especially vis-a-vis AI technology, the use of blockchain, tokenizing real-world assets. So therefore, there are different pockets in the Middle East that will attract investors' attention. It's just that on the whole, I think we are going to witness a prolonged conflict within the region and within the wider region going forward. It's very difficult to have a one-size-fits-all approach to investor sentiment in the Middle East, Romano.
Yeah. Ozan, always good to have you on. Thank you so much for getting up early for us. Ozan Ozkural, founding managing partner of Tanto Capital Partners. Thank you. Well, coming up, George Osborne's message to Rachel Reeves ahead of the spring statement from one UK Chancellor of the Exchequer to the other. We hear from the former UK minister next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Hong Kong. UK Chancellor Rachel Reeves is expected to cut government spending by billions of pounds in her spring statement today. This comes amid growing criticism from her own Labour Party that she risks alienating voters. We spoke to former UK Chancellor of the Exchequer, George Osborne, on the sidelines of the HSBC Global Investment Summit, and he wished the current Chancellor the best of luck.
The overall message needs to be a bit of a reset, frankly. The government didn't get off to the best of starts, although it had a lot of goodwill, and it inherited problems. But the result is at summits like this, on the other side of the world, there's quite a negative sentiment about the UK, and that needs to be changed, and the government can do some things to show they've got an economic plan, the plan is pro-business, the country's going to live within its means. And if Rachel Reeves can deliver that later today, all for the better. And certainly I wish her the very best of luck.
Any advice?
Well, I think plan beats no plan is the old adage, and I don't think at the moment people here sense that the UK has a clear direction that it's heading in. And I think Rachel Reeves would say, well, I had a black hole to fill and I've had to fix various problems. Maybe, maybe not. But what's true is the government has not until quite recently given an unabashedly pro-business or pro-enterprise message. If anything, it's been kind of raising taxes on business and pushing entrepreneurial and wealthy people away. That can change, and certainly I think the messaging in recent weeks has been a lot better from the government and a lot better from Keir Starmer, the Prime Minister. But this budget, I mean, if it walks like a budget and quacks like a budget, it is a budget, even if Rachel Reeves won't call it that later today. this is a moment to sort of cement some of the good work of recent weeks.
What do you think the government is still getting wrong?
I think the overall message about the UK, and this has been true for a number of years, has not been one of overwhelming positivity towards the private sector, business and enterprise. And it started under the previous Conservative government. I was a Conservative Chancellor almost a decade ago, so but I will say the last few Conservative governments had an ambivalent message about business. Then you got a Labour government that came in actually saying a lot of good things about business, but its immediate actions were to jack up tax on business, jack up the wealth taxes and the kind of things that allowed, for example, non-doms to remain in the UK. And the result has been quite a negative sentiment about the UK, against a backdrop in which anyway there was a question of how countries like Britain, applies to other European countries, are going to make their way in the world. Now, I think that can change. These are not unfixable problems. And there's a lot of strengths in the UK economy that can be talked up and supported by policy.
That was the former UK Chancellor of the Exchequer, George Osborne, speaking to us at the HSBC Global Investment Summit in Hong Kong. And coming up, truce in Mozambique. We get the details on the deal between the ruling party and the opposition next. This is Bloomberg.
Mozambique's opposition leader, Venancio Mondlane, has agreed with President Daniel Chapo to end post-election violence that has battered the country's economy and left hundreds dead. Mondlane says the two have reached a deal in principle at a meeting in Maputo, the capital, on Sunday. The informal truce marks the most important step in restoring social and political stability in the gas-rich Southeast African nation. For more on this, let's bring in Bloomberg's Ndiro Oganga, joining us now from Kigali. Ndiro, does this agreement come as a surprise, especially when you consider just how many months we've been waiting to see some sort of resolution to the election last year?
Hi, Jen. It absolutely comes as a surprise. On the 18th of March, we saw Mondlane calling for a nationwide protest commemorating what he called true heroes, people who lost their lives in the course of the protest. And now we are seeing this conversation between him and the president. And it's also a surprise from the government side because President Daniel Chapo called for conversation with opposition leaders. He excluded Venancio Mondlane. And the impact of this agreement was being questioned because Mondlane is the most powerful opposition leader, and he was the force behind this protest. So that's why these talks come as a surprise. But to Mozambicans, definitely it comes as a relief. And it's a relief because, one, it goes ahead to ease the political tension that has been going on for months, and also a relief for the business community. They saw their businesses shut down, banned. We saw some of these international companies in mining declare force majeure. And there was also fear that prolonged protest was going to delay the $20 billion Total Energy natural gas projects in the country. So that is why this, as much as it's a surprise, is very much welcomed. And we have seen that these protests have had quite a significant effect on the economy. In the fourth quarter, growth slowed down to about 4.9%. And also the government says that they've lost over $600 million. So it's high time that they come on board, have a conversation, and try to find an amicable way to move forward.
What do we know about what the road to recovery looks like then, Ndiro?
It's a bumpy road ahead, Jen, because this is a country that is already struggling with its economy, and it was vulnerable even before it went to the elections. And the political unrest just exacerbated the vulnerabilities. It missed its IMF disbursement. And in March, the IMF team left without a staff-level agreement. The longer it takes to unlock financing, the tighter fiscal position the government of Mozambique is left in. And there's very little they can do because they still have to adhere to the parameters of the IMF program that they're currently under. S&P has also assigned them selective default after they swapped their local currency debt that was maturing this March for longer maturities and lower coupons. So this is a country that is trying to find a political solution so that they can inject vibrancy back into their economy.
Right. Thanks so much, Bloomberg's Indira Oganga in Kigali, for us covering the events in Mozambique. Let's check really quick on where markets are positioned ahead of the trading day. We are still looming towards that April 2nd deadline, but still waiting to see what exactly that looks like, getting a bit of clarity from the U.S., but still a bit of red on the screen. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg with Jumana Bersetchi in Hong Kong. Stick with us for Daybreak Europe.